The master storyteller of the corporate world is back again at the helm of Starbucks. And just as Howard Schultz gets into the seat, the company announces that it's going to be suspending its share buybacks. Share prices are typically a function of a few different things. There's the fundamentals of the company. So what is it doing at the financial level? But also, what is the story that the company is telling the market? And do people buy into that story over the long run? And Howard Schultz, who's been in the CEO seat before, is a fantastic CEO when it comes to narrative and storytelling about a brand. Starbucks' growth over the years has been a function of, yes, the stores and then the coffee, all that stuff is well, the operations, but they tell a brilliant story. And one of the things that Starbucks is very good at is having its thumb on the pulse of where social narrative is going. So we've got a macro environment right now where eyes are very much on corporate profits. I think last year was record corporate profits in the US. And you're seeing an ecosystem or a feeling around issues with work. And last week we saw the first unionization of an Amazon facility. Starbucks is Starbucks has been in the position where it's been fending off, or at least had pressures from unionization of its workers too. And so the first thing that comes to mind when reading the story about Starbucks' suspension of its share buybacks is that Schultz is saying, okay, we're going to go back and reinvest in our people in the stores again. And James Phillip on his channel has a really great take on how over the last few years it's felt like operationally the stores are falling off a bit. It's harder to get into the stores. The drive-thrus are a bit weaker. It's just a more difficult thing to go and spend money, which I think is absolutely true. I think it's a good idea for the firm to reinvest in its operations. But if you think about the narrative around unions and work right now, to message out into the ecosystem that you're going to be reinvesting what would have gone to stockholders, money back into workers in stores, is a great narrative when it comes to getting on the right side of the narrative, at least. And I think Howard Schultz is brilliant at doing that. And so it's a clever marketing sentiment here to do this. The immediate impact, of course, is stock price will fall. Stockholders and the market loves share buybacks because it limits the pool of shares. It's kind of an artificial manipulation of the stock price to the upside. So it's inevitable that the stock price will come down. What's interesting also, I think, is that I dug into the financials a little bit before hopping on here. And in Q1 of 22, Starbucks actually beat on revenue, what the market was expecting. But where it actually missed, and what's triggered a lot of the downward pressure on the price, is that their earnings per share fell, or they missed. And so they missed by something like 10%, which means that costs somewhere are going up. And if you dig in a little bit, what it's saying is that, the supply chain crisis and things around the cost of goods that they're selling is going up. I also wonder that whether Schultz's return as CEO is a function also of, one, that earnings miss, which is a big earnings miss. Traditionally Starbucks doesn't miss earnings by a lot. They either beat or they miss by a little bit. So it's a big miss. And does that mean that Starbucks as a company needs to shift towards making sure that it's on the right side of the social narrative? Because maybe the outlook is that, with inflation, with rates, with all these different things, that the supply chain not really cleaning up, in any way, shape, or form. Does this mean costs are actually going to stay at this level where Starbucks is going to miss on earnings, but beat on the revenue side? And Schultz's return is kind of a buffer to that kind of a narrative going forward. I wonder if that's in play a little bit. One great thing about the last CEO is that I think he put in the rewards program, right? There was a little bit of a story recently about how Starbucks is actually more of a bank, which I think I disagree with. It's not a bank in the traditional sense, but there's definitely a lot of deferred income on its balance sheet, and in the way that people use the app and store their value on the app. So that was a genius move, I think, in terms of balance sheet management from the last CEO. But is that enough, from a social sentiment, which I think is a big part of the success and lack thereof of companies in today's world? How are they on ESG? How are they on the way that they take care of their workers? All those kinds of variables play into the stock price. And I think getting Schultz back in is a way that Starbucks is recommitting to controlling the narrative around the brand versus being primarily a stock price driven company. So this is an interesting story. I'd definitely recommend going to check out James Phillips' video, his take on the story too. I think it's a very interesting take on the operations and kind of the real ground level view of the company. I think it's pretty interesting. So let me know your thoughts in the comment section below. What do you think about this suspension of the share buybacks? What is the kind of long-term strategy here? And please also consider subscribing to the channel if you enjoy.